This is Mitch Allen from Advanced Financial and the Alpha team, bringing you another video. This is a common topic I get asked a lot about, and I'm sure you've seen other videos or discussions about it, but paying your house off early. Um, I have a spreadsheet up here that a colleague of mine put together just as an example to kind of run through and talk through. Does it make sense financially to pay off your house early and then invest more after you've paid off your house? One could argue you never truly own your house because of taxes and insurance. So there's that aspect that we're not going to really dive into. But from this financial standpoint, let's just kind of go through the numbers and I'll give you a couple tidbits at the end as well. So in this case, right, we have a loan of 300,000, an interest rate of 5%, and it's a 30-year term, right? The original loan payment with minimum payments is $1,610. Total interest paid over those 30 years is $279,767. Quite a bit of interest, right? In this example, we have with the original loan making an additional $400 a month towards the mortgage payment, which would put you at $2,010 a month. Total interest then comes down to $170,000. The interest saved $109,696, and you pay it off 126 months early. If you invest the total amount at 9% after the house is paid off, you'd have $413,000, right? If making the minimum payment and investing the $400 per month, right? Investing for 360 months at 9% interest, you'd have $685,000, right? The difference is about $272,000. So financially, right, because of compounding interest, the smaller interest rate you're being charged versus the interest rate you can get potentially in the stock market. S&P's average nearly 10% per year for 75 years. So we use 9% in this scenario. Let's say you increase that, right? So now you're paying an extra 1,000, puts you up to 2,600 per month that you're paying towards the mortgage. Total interest paid 109,000. So you're saving quite a bit on interest. You're saving 170,000. So then you're investing at 9% for those 203 months. You'd have 1.2 million at 9%. Same scenario. If you save the 1,000 invested for the 360 months at 9%, you'd have 1.7 million, a difference of $500,000. All right. What's the point about going through all these numbers? Financially, from a wealth building standpoint, you were better off saving as long as the market cooperates, right? I have to preference that, right? At least based on historical numbers, you're better off investing rather than paying your mortgage off early, financially, from a wealth building standpoint. What's the other reason, though, to pay off your mortgage early? Psychological. This always makes me think about the debt snowball, right? Where financially it makes more sense to pay off the higher interest rates earlier, right? You're saving interest from that aspect. But psychologically, if you start with your lowest loan amount, put all your extra dollars to that, pay it off while paying the minimums on the other loan amounts, you get a high from an accomplishment when that loan is paid off, right? Which encourages you to do more. Then you take that payment that you made toward the smaller amount and apply it to the next smaller amount, because psychologically you're seeing victories, and that can make a difference. Similar to paying off your mortgage early. Psychologically, not having that debt weighing over you can make a lot of differences. It can also encourage you to take more risk, as in starting a business or investing differently. There's all kinds of things psychologically that it can make a difference, where potentially you could build more wealth if your mortgage was paid off early. These are things you should talk through with an advisor. If you or someone you know has a situation like this and they just want to talk with someone, have them talk to someone on my team. Remember, like and share the video, and thanks and have a great day.